Hey, what's going on? It's Marshall back with Bids and Offers, and in this video, I'm covering today's trading session from Thursday, October 30th. I'm going to go over the first two trades that I took short on the S&P 500 futures, confirming those ideas with the order flow. And I'm going to go over the two stop losses that I took after that, and then the 17-point win that paid for both of those losses, plus 6 points of profit at the end of the day. I was only winning about 20% of the time today across all the trades that I took, but I still came out 6 points green. That is the power of risk management and good R multiples. I'm going to show you exactly the reasons that I had to take the trades that I did, why some of them didn't work out, why some of them did work out, and I'm going to show you how you can use order flow and precise entries to help your trading and really understand the underlying market auction that creates these candlesticks on our screen. But before I get into any of that, make sure you're following me on my Instagram at Bids and Offers. I post on here every day about the trades that I'm taking. I go over in depth everything related to the way I trade, order flow setups, etc. I go over stuff specifically about order flow and the types of trades that I take, and exactly the reasons that I take them. I'm trying to be as transparent as possible on here, and you can always DM me if you have any questions or want to talk about something. Make sure you're following me on here at Bids and Offers. There's super valuable resources on here, and yeah, let's jump right into it. So yesterday we had FOMC, and that happened right here at about 2 o'clock. We had a lot of volatility that came into the market, and what happened after the fact was very early this morning at about 1 o'clock or about midnight, we actually popped up above yesterday's high, which was the 69.52s, and failed above that high. You see, we only got like 3 points above or 2 points above that and then failed. So as today's session started to play out at about 9:30, we started to pop up here at 10 o'clock and are starting to fail above the 910s, 911s. What that looks like on the smaller time frame chart is this. At the open, we drop. We rally all the way up above the high of day, but we are unable to get above the 910s and 911s. We start to actually develop this area of supply up here and start to sell off beneath that. So the first trade that I took today was a short off of this 6,900 level, seeing this large positive delta come through the market. Lots of buyers that were not getting the reward that they were looking for or move up. The market actually started to move away from that level, and that's when I got short. I'm going to show you that trade right here. This is a recording of this early morning session from today. I started this recording at about 10 o'clock, and as you can see, I actually jump in the market short right here at these 99 3/4 with my stop at 04, risking about 4 points on this setup, speculating a move down towards these 85s right here, this high volume node from earlier this morning off the open. And my confirmation for this was seeing buyers fail above the 900s and above this VPOC here on this current session profile. So I'm going to scroll this forward and you're going to be able to see what happened in this trade. So right here, the market actually pops up and I almost get stopped right here. We start to move back down away from that level. And as we get down towards this low here, something happens. As you can see right here, this massive bid gets filled. You can see that on the book map over here. 68.90 bid gets filled, and we actually move up right away off of that level there. So I'm up like 8 points down there, 9 points at the 90s, and I'm looking for a move towards the 85s. I'm really willing to take this trade off anywhere below the 90s. What happens is the market comes all the way back up, hits me break even. And as you can see, I get hit break even right there, and I actually jump back into this trade. I get short in this trade again because I see this very large buyer come into this offer, and this offer gets filled instantly, kind of like an iceberg order right here at 900. I put my stop above that and I hit it short at 98, speculating the exact same thing that I saw just before a couple minutes ago, about 10 minutes ago. So I'm in this short, I'm up like 12 points, you can see that right there. I go break even, and now something I want to note is that as all these sellers are coming in, look, 600 lots, 1,000 lots, I really want to see the market remain under these levels so that these sellers can get paid. Okay, I don't want to be going against the tide. If I know that sellers are getting absorbed at the current moment and I'm a seller, I need to be very careful and I want to let my position ride or take it off if I see something that I don't like. What I could have done down here at these 88s while I was about 10 points in profit is seeing this absorption and the lack of follow through right here. All those sellers got absorbed and the market did not follow through. As you can see, it actually pops up off that level. Another bid gets filled and we pop up. On this second bid getting filled right here, I could have hopped out of the market for like 8 or 7 points of profit here. That was an option. I didn't really want to do that. I kind of wanted to just let this trade ride down to these 85s. I don't know if that's necessarily greed. That was just me following my plan. But as you can see, I got stopped again right up here for break even in just a second. This thing rallied right back up to my break even. I got hit break even. So now I'm basically 20 plus points I've given back to the market in unrealized profit. So I'm frustrated, naturally. I do not want to get caught up in the mix of the chop, and I want to remain oriented on finding high probability, repeatable setups backed by the order flow and market context. This next trade that I took right here, this was another short off of 900. This happened as soon as I got out of the second trade right here for break even. I saw the market pop up above this 900, and I'm going to play this for you right now so you can actually watch it in real time. As you can see, we start to rally up into this level here, and something that happens is there's an iceberg order filled. Look, 200, 900, 1500, 1000, 2700. You see how all that volume came through there super quick? That signals to me that there is a lot of offering being done at 6,900. If the buyers cannot get above this level, I want to short this market again because my setup still remains valid. And I hit it short right there at 97, and I put my stop right up here at 902. Still, this 905 delta is being rejected. Now these 900s, there's massive plus 2,400 or 2,500 delta right here, or a 2,700 delta at 900. That is a lot of buying where if the market cannot get above that and stay above it, that massive lot of buying is going to be in the red. All those buyers are going to be losing money. So I want to make money on that aspect of them losing money. So I hit it short right here, and what happens is we kind of dilly-dally around this price, around these 97s. This was a trade where I didn't really have the wiggle room to go break even on it yet, and I had my stop above this high, and what happened is that the market just rallied above that, and I got stopped again right there. That was the first full stop I took for almost 5 points. Very wide stop on that. I had to adjust to the volatility today. The market was moving pretty quick, very erratic movements back and forth. As you can see right here, we were trading at the 99s, and we like super quickly dropped all the way down to the 93s. So post FOMC, you typically want to have you either want to size down a little bit or widen your stops, widen your targets, and adjust to the market range, which is typically more volatile after a big news event like that. So that is the first stop of the day. I get into another short. I hopped into this short here, and my reason for this was being, as you can see on this 30-minute chart, we failed above that VPOC once again, and we once again could not get above the 911s at all. And as I said earlier in the session, earlier in the video, right here, we popped up and failed at these 910s, 911s. Now we just did the same thing again there, and now we're back below the VWAP. So I'm looking at the market here, and I see how these pop-ups are getting defended by sellers. You know, these buyers are failing on pretty much every pop-up here. This is where I hit the market short right there. I have my stop at 904, and that's just above VWAP here, speculating another move down. Now the market starts to move down. We actually get some pretty good selling on the bid here. Nice lot of selling at 500 lots of selling at 96. And what happens is I'm up like 7 points on this trade. I should have been break even. When I'm up 7 points, I'm almost always break even. I don't know why I wasn't break even on this trade. I was actually up almost 9 points on this trade, so more than 7. I don't know why I didn't go break even, but I didn't. And what happened was we came right back up, and I could have gotten out there for no loss, right? But I let it ride all the way up to the O2s. I could have avoided that loss. That was kind of an unnecessary loss on my part. Being that I was already up 8 or 9 points, it's an automatic break even for me. That is my rule. I broke that rule, and I paid for it with a 5-point stop, a decently wide stop. So now I'm down like almost 10 points on the day. But I need to remain focused on only taking setups that are repeatable and ones that I have conviction on through the order flow and the active ticker tape that is confirming buying and selling activity in real time. I only trade when I know there are buyers or sellers entering into the market, and I only trade when I know that somebody is getting trapped. And the only way to see that is with the order flow. Now I'm going to get into the final trade of today. I'm going to show you this 1-minute chart with this volume profile overdrawn, and then I'm going to show you the footprint chart, which allows me to see the volumes on the bid and the ask, price by price. So this volume profile suggests to me that the value area of today is represented by this low, about 87 to 86, all the way up to this high about 908, 910. So I know that this is where most of the volume has been done so far today. After this drop away from these 906s down back to the bottom end of the value, I waited for a move back up into these 904s, 905s. The reason for that is because of this large positive delta that got executed right in here at 905. When the market rejected above that, now I know that there are buyers who are trapped around the upper end of today's balance. So I want to profit off of those buyers being trapped, but I only want to get into that trade when I can confirm it again in real time using the tape. This is the footprint chart. This chart shows me all of the volumes done on the bid and the ask. Remember that aggressive sellers have to sell into bids, which are passive buyers in the market, and aggressive buyers have to buy from the people on the offer, passive sellers in the market. So all these numbers that are on the left side of this footprint are aggressive selling volume that sells into bids, and all the volume on the right side of this candle are aggressive buyers who are buying into offers. By looking at this chart paired with the candlestick chart, I can see where people are getting trapped in the market, and I can see who is getting paid to help keep myself on the right side of the tide. Right here, we have a plus 1900 volume executed at 905 right before this drop. This means that there is positive 1500 contracts on the ask versus the bid. You can see that there's 1900 over 555. That's like a plus 1400 delta right there. So I draw a line over across. This is the final trade of the day that I'm looking for. Just a rally back up into this level to see if buyers are able to get above that 905 and hold the market there. If they can't, I'm going to validate this positive delta as trapped buying like they were before, and I'm going to find ways to get in short. That is exactly what I did right here. I got short at 904 with my stops just above this high at 907, basically invalidating my idea if buyers are able to get a move up and get paid. I'm looking for a move down to the other side of balance. So right here, I have this profile drawn to where I got short in the market at 1218, and I actually held this all the way down to these 87s right here at the other side of value. So I'm going to show you what the screen recording looks like of that trade right now. So jumping into the screen recording, something that I want to note here is that we are already starting to pull away from these 905s. If you look at the right side of my screen, this book map, if you want 20% off book map, the link is in the description of the video. On this book map, we see these offers that are getting filled right here, and the market moves away from them. These aggressive buyers are actually unable to get back above these 905s and hold. Right here, I see some aggressive selling come into the market, and this is where I get short at 904. So we're seeing it pop up, fail, pop up, fail. That's where I get short right there at 904. I'm speculating a move down to this other end of balance. So if I'm risking 3 points on this setup and I'm looking for 17 points of profit at the 887s, that is about a 5.6 return on risk multiple. My 5.6 R multiple is really good, and that's going to pay for multiple stops that I have taken, and it's going to allow me to come out green. So this is where I get short, and as you can see on the book map, all these pop-ups are getting defended by selling. You can see that right there on this final pop-up. Could not get above that offer at 906, and the sellers sell it right back down. So this right in here is a great confirmation for me to get short in this trade. The market starts to dump quite aggressively, and actually what happens in this area is that I get down about 12 points in profit, and the market actually starts to pop back up off of this block of selling. This could have been a reason for me to get out of the trade at the 91s. Again, I wanted to hold this thing down to the other side of balance. I did think that we could get a pop-up off this that could be sold back down into. So right here, I sit through this pop-up, and essentially this thing just drops right back down through that area of negative delta, right down to my target right here. As you can see right there, I get out at the 87s, and that is the final trade of the day, netting me about 17 points of profit, bringing me to an end of day close of about positive 6 points. I won technically 20% of the time today, but I came out 6 points green. That is the power of risk management. Cut your losers short and let your winners run. Funny thing is that today I actually had pretty wide losses. I actually had pretty decently sized losses. I had a 4-point stop and then a 5-point stop. And I usually don't have stops that are that wide all the time. I usually have stops that are between 2 and 3, maybe 4 points sometimes. Today, I was still able to come out green, even though having won 20% of the trades that I took today. That is pretty much all I have on this trade here. I go very in depth on all of this that I just covered, all these order flow setups and everything that I'm looking for on a minute by minute basis in the live trading room every single day. It's a very, very valuable resource for beginner traders who want to learn how to view the market as an auction, which it is. All these candlesticks that get formed over here on your trading view charts, they all form based upon this data right here on these footprints and on this book map. These two tools help me visualize the volume that comes into the market so efficiently that I'm able to have really great return on risk, and I'm able to catch trades right before they run with very tight entries and very tight stops. The market does not move because of candlesticks, it moves because of buying and selling. And if you're able to read that buying and selling efficiently, you will be able to put yourself on the right side of the market to make profit long term. The most profitable traders that I know only look at this data. They don't care about any candlestick pattern. They don't care about any astrological stuff like this ICT stuff. They only care about volume being done and where price is at. I also cover all this stuff in my exact trade playbook in the order flow trading guide. For those of you who are on the wait list for the order flow trading guide right now, I appreciate your patience. I'm adding in more stuff to the playbook section right now, and I'm going to make it the best that it can be. So I appreciate your patience. For those of you who are not on the wait list for the order flow trading guide, you can sign up right now with the link in the description of the video. It's going to be out pretty soon. I'm going to have a lot of stuff in there about how exactly to accelerate your trading from basic candlestick science to the order flow and really grasp the ability to create an edge using the order flow day in, day out, just like professional Wall Street traders do. Again, price action is not created by price action. It is created by buying and selling. If you are able to learn how to read that, you will be able to learn how to create an edge and be a profitable trader long term. I'm dropping a video very soon on specifically the footprint charts and how to use them in your trading every single day. Thank you so much for watching this video fully. I really appreciate you sticking around to the end. Again, remember to go follow me on Instagram at Bids and Offers. I post on there all the time. Super valuable resource. I'm going to have more stuff coming out very soon. Thank you for watching, and peace out. Have a great day.